Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. Coming to you live here this morning. We have lots to discuss. Markets are starting to get a little volatile here. Earlier this morning, markets were up. Now we've gone negative. NVDA was up. Now that's almost negative on the morning session. The dollar-yen is breaking up, seeing highs it hasn't seen since 1986. Be ready for intervention. If you've watched my game plans, you know that is one of the big possibilities that could throw a curveball at this market. So lots to go over. We're going to look at Bitcoin. We're going to look at gold, silver, and the rest of the commodities, including some commodities I don't look at usually because they're telling us recession is coming. All right, let's get right into the action, guys. All right, let's go right into the charts and into the action right here. This is the S&P 500 on the pre-market data. So the spiders, which is the SPY, 10-minute chart right here. Look at how we opened at 4 o'clock in the morning, up sizably, and look at since then. It's just been a slow waterfall to the downside. We are now net negative on the day. So if we look at where we closed yesterday, we closed right there. We were up nicely. We have now gone negative overall. So what is going on here? In my opinion, what's going on is, number one, NVIDIA is starting to lose a little of that gain that it had yesterday and pre-market. That obviously is a force that has kept the markets afloat. You're also seeing the dollar-yen starting to get crazy out there. And again, folks, most people really, I mean, if you talk to mainstream media or you turn it on, you're not going to hear much about this, but this is a huge event. I'm trying to give you guys the inside of what the institutional players, the top hedge fund managers are watching. This is one of the things that they are watching. So let's flip right over to the dollar-yen right now. Take a look at this chart. This is a chart I have gone over with you guys quite a bit. Here's your daily chart of the dollar-yen. Remember, the higher this chart goes, the weaker the yen against the dollar, right? So the weaker the yen is getting as this goes up. Well, we can clearly see we had this beautiful channel. This is where the last intervention occurred, where the Japanese central bank came in and intervened. They dumped U.S. dollars. They dumped them hard to basically strengthen the yen. They dumped U.S. debt to strengthen the yen. That's why we saw this big correction. Where did it go? It went amazingly right back to the low end of the channel, and the channel held. That's all you need to know. When the channel holds, the channel holds. What do? We start to grind higher again, and just last night, just into this morning, we have now broken above the high from when they intervened. That is now a potential breakout. It also means that, as they said a couple days ago, the Japanese central bank said a couple days ago, they will be ready to intervene again. The problem is the U.S. has sent warning shots across their bow saying, don't do it. If you do it, we're going to label you a currency manipulator. Again, is there much teeth to that? No, but I mean, generally countries don't want to be known as a currency manipulator. But ultimately, it's the U.S. saying, literally, if you guys do what you need to do to strengthen your yen, you may hurt us in the process. You may cause other kind of, catastrophic events to unfold. And this is what is going on in the system that we're in. I've talked about this all week long, last week as well. We are in a house of cards that everything is interconnected at this point. So watch this, guys. If we continue up and go to the high end of that channel, I would be shocked if there's not major intervention and major problems that arise from it. Okay, so dollar-yen, number one on our chart, or one on our list for things to watch. Other things to watch here as well. The U.S. dollar today, it is pushing up, although we are starting to get towards resistance. So right here, right, we have a level right here, here. We have this area, and we're getting very close to that level. It's just above 106. We're currently at 105.99. I would say it's about 106.20 or so, give or take, on the DXY. This is the daily DXY chart. So very clearly, this is resistance right here. This is your support line right there. The question is, do we hit and we go back here, or do we hit, pull back, and break out to the upside on the U.S. dollar? What's interesting here is this. Everything is interconnected, like I said, right? So if we hit this level right here, is it possible that that coincides with the Japanese central bank intervening and strengthening the yen, which would then cause a pullback in the dollar? You see how it all works together, how the charts all work together. This is why I get so excited about charts, is because they literally lead you from point A to point B to point C, and they can tell you what might be happening, and the charts guide you to say, wow, that actually makes sense because we're about to hit resistance on the US dollar. Okay. Couple other things we have to watch. Another thing that we have to keep a very close eye on. Take a look at the CAC today. This is the French stock market getting a big down day. You guys, I talked about this chart yesterday to you guys. What type of pattern was this, right? Down. Kind of as obvious as anyone can make it here. Classic bearish pattern. Look at what's going on today. This is the candle today. We're starting to break lower. This is a classic bear flag. It guided us to think that that was the likely scenario, the likely probability, and that's exactly what's going on. Now, if we zoom back out, there's a major, and I repeat, major trend line here that every investor needs to watch, because when you're looking at the CAC, what do you see? You see a trend line from here to here, and right where that last low was, we just tagged it. If this bear flag breaks and does what it should do, you're going to see a major breakdown of a trend line that goes back to September of 2022 get broken. All right, so that would be a potential another kind of nail in the coffin for global financial markets if you see a breakdown like that. Flipping over to the DAX. Now, the DAX is the German stock market. We saw this wedge pattern break to the downside, bear flag, and then today, same thing. Look at what's going on in the DAX. The DAX is starting to roll over. Right here, it's starting to move down. We'll see if it takes out this recent low just below 18,000. If it does, that again spells trouble as well, and we're going to see a domino effect in Europe potentially. And remember, Europe warned France after they went through this political upheaval that they need to get their house in order on a debt basis. And this is, again, the issue, is you have what's going on in Japan with the Japanese yen, what you have going on in Europe. Everything is interconnected, and to the point where you basically have the EU saying, hey, France, get your debt under control, because if you don't, it's going to be a domino effect to all of the countries there with their debt. And ultimately, if Europe goes up in smoke based on debt, guess what? It influences the U.S. It's all interconnected, and that's really what should keep you up at night. You know, it's not necessarily like, oh, well, will NVIDIA's growth rate continue at this insane pace? Like, that's what the narrative is on TV, but in reality, there are so many other things out there that should be worrying you. Now, I'm going to talk about something else here. We're going to talk some commodities, and usually I do commodities a little later, but we're going to go to some other commodities because they are signaling a recession is coming, and again, it is coming in a big way. I want to show you this chart. Look at this chart of nickel. So nickel, a obviously industrial metal, right? And look at what has happened to nickel since basically a month ago. All right, a month ago, I think this high was May 20th. It's the 26th of June. So look at this fall on this. Now, we are hitting technical support down here, so you might see a bounce in nickel, but this is a monstrous drop. And if we zoom out here and I do my measurement tool, we can see from the high there to the low, it's basically a 21% drop in 1 month in nickel. Trust me, that's not happening because demand is looked at as being robust and everything is hunky-dory, right? I mean, let's be honest here. Let's just use our brains and say, okay, well, does that equal a strong global economy? Probably not. Just going to go out on a limb here. The other thing to watch is copper. Copper has broken down. It had a great run. It is now down 15% from just a month ago as well. And what's crazier is that it's not just these metals. And you could look at zinc, you could look at a lot of these other metals, but we know even silver, right? Silver is now from 32.5 back to almost 28. That's also come in. Now, granted, that's a store of safety too, so it's industrial / store of safety, and therefore it's down percentage-wise a little less than 20%, let's say, but it still tells a story. And again, one of the other things I want to show you is it's not just the metals. Look at this fall on wheat. I mean, holy cow, what is this, a small cap? Looks like a micro penny, stock or something like a crypto play, right? I mean, that type of drop is insane where you've now lost, and let's do a measurement. I actually haven't done a measurement on this on wheat, but this drop here on wheat is epic, 24% drop since essentially the end of May. In 1 month, 24% drop. And again, you could look at corn, you could look at a lot of these other players as well. They are down sharply in a very short amount of time. Now, you could say, well, does that tell us recession? And the answer is yes, it really does. It leads us down that same path because ultimately people start cutting back even on going out to eat, even eating the amount that they're eating, and you start to see these drop. And it's just also other countries starting to say, hey, we got to produce more. and more supply comes on the market because they're trying to make money, they're trying to get their piece of the pie, and that causes an oversupply as well. Now, same thing, you're at a good support level. So if I'm a trader, and I am a trader, this is something that in the commodity service we're looking at as a long trade right off of these levels for just a bounce though. But these type of drops in commodities, so number one, it tells us that at least for food, we are seeing a potential lower inflation pressure, right? Now, again, you can't say that for oil and gasoline because those are going up, which is actually not good, right? I mean, I think it's great to see food costs coming down. That's great. But ultimately, you need to see everything coming down, and more so housing and rent, right? I mean, those are two of the main inputs. Insurance is beyond ridiculous. How many of us look at our insurance costs, and they've just gone through the roof over the last couple years, whether it's car insurance or homeowners insurance, all of those type of things. All right, so that's what I wanted to point out. There's some big stuff in the underbelly of this market. Now, let's continue on. Let's see, first of all, I want to check back on the S&P. Wow, S&P keeps going lower here. Look at this. So we're still falling on the SPY here to the downside, so monitor that. But let's go to NVIDIA here. Look at NVIDIA. Holy cow. So this thing was trading as high as 129 this morning, pre-market. It is now collapsed basically to 125. It looks like it kissed 124. Actually, probably would be trading this if I wasn't on this stream with you guys right now, but that's okay. It's well worth it. But either way, what a rollover here in NVIDIA pre-market. And remember, NVIDIA is the market at this point. If NVIDIA cracks, the whole market cracks. It's just that simple. It had a great bounce yesterday. I want to show you something, though. So if we talk about the daily NVIDIA chart here, and you can see I have my ultimate target down here for where major support is. We had a bounce yesterday. But if we zoom in on this, I want to show you this. So if we zoom in on this, number one, where did we top out yesterday? We topped out at gap fill. So this is a gap right here. We came up, we filled that gap. Number two, if we do a Fibonacci retrace and we take the all-time high to the low right down here, what was also right there, I don't know if you guys can see it, it says it's a 382 Fibonacci retrace, 382. And these are the things that I look for. I even talked about this with our members yesterday, that this level would be significant. Now, pre-market, we were above that, but we've come all the way back down now, trading at 125 and change. All right, so a little bit of a tidbit there as well. A couple other stocks to go over here real quick. Chipotle had its stock split. Now, Chipotle, it's been in an amazing uptrend. If I zoom out on this, you got to take a look at this, guys. Look at this uptrend. But the problem is this, is that we know fast casual dining is suffering. Not only that, but literally my stretch coach that comes in here twice a week, he just said to me the other day, he's like, man, I was so disappointed in Chipotle. They literally gave me like the tiniest portion sizes. And then literally that night, I read online that people are complaining about the portion sizes at Chipotle. What does that lead us to believe? It leads us to believe they're trying to squeeze every last penny out because they're starting to struggle. And that to me tells me when this channel breaks right here, boom, to the downside. You'll see a big move to the downside. So look at Chipotle right now, post-split. Maybe it catches a bid, we'll see. But ultimately, when this channel breaks around $64, $63.50, watch for significant downside in Chipotle. I think they miss earnings next, or at least talk about guidance being low when they report earnings next quarter or in the coming quarter. FedEx, monster move on FedEx, guys. Really remarkable here. It is coming down a little bit with the market, but really, this is a monster move up. I was looking at their earnings. I'm trying to figure out why it's up so much. They missed on revenue. Their earnings beat by a fraction. Their guidance was solid, but overall, to be up 15%, a little bit of a stretch. But check this out. You see this trend line right here? See this trend line we touched right here, right over here yesterday after hours? I'm going to go to the daily and show you this trend line. If we zoom out and we bring this in, this is where it traded yesterday after hours, right into that line. Look at the channel. Amazing. Right here, to here, to here, and to here. That's 4 hits on the low end. 1, 2, 3, and after hours, 4. I think this is probably at least around this 300 level. It's probably a sell off based on past history. If you look, every time it's hit, it's pulled back, pulled back, pulled back. So again, my guess is pull back. And if we do see a slower economy later this year, it makes sense that FedEx could pull back. So just something to keep an eye on there on the charts on FedEx, which reported earnings. Other stocks in the news here, General Mills, which again is kind of snack food, right? That kind of stuff. getting hit on earnings pre-market. I don't really have any levels on this. It's not really a wild trading stock generally, but nonetheless, it is down on earnings, something to keep an eye on. And then Rivian is a big mover, or was. It's a lot less than it was. This was up like 60% at one point up here. They got a deal where I think they got $3 to $5 billion from Volkswagen Infusion to kind of partner up. And so that thing just took off yesterday. It is coming in a little bit. These are the ones where I'm just not sure. Does it go and do a short squeeze? Does it come back in? I'm going to stay away from it for now, but nonetheless, a big mover on the day. All right, wow, I got to take a breath here. All right, what we're going to do here, guys, is we're going to flip over and do our Wheel of Appreciation. Let's do it right now. Yesterday, Smart Money Commodities and Miners won 3 months free. So let's see who wins that for today. And remember, support at verifiedinvesting.com. Reach out to them. They'll get you all hooked up. Chris Keene, 4917. Thanks for the easy one today, guys. Appreciate that. So Chris Keene, 4917. Reach out to support at Verified Investing. Claim your 3 months free of Commodities and Miners Smart Money. All right, let's do that spin the Wheel of Appreciation, which, as I always say, I am unbelievably appreciative to you guys who always tune in and who give your time to learn here with me. And today, look at that, Token Metrics, 1 year premium subscription. That's a very cool one. So again, we will be giving that away, Token Metrics tomorrow, subscription for a year, valued I think at $2,000. That's a pretty sick valuation right there. All right, on that note, we're going to take a quick 30-second break to thank Lux Algo, which continues to be the rock star of what I love about trading, which is technicals, chart signals, all this kind of stuff. Links below. Check them out, guys. They do really offer some pretty amazing stuff. Here's a quick 30-second break.
Have you considered enhancing your trading experience? We have an amazing tool for you. Lux Algo creates next-gen trading indicators to help the world understand the markets in a smarter way. They have the largest user profile on TradingView and are the only official Discord partner in the technical analysis space. Lux Algo Premium operates seamlessly with top platforms, such as TradingView and Discord, making it the perfect tool for every trader. Take your trading analysis to the next level with Lux Algo. Please visit the description below and sign up for Lux Algo today.
All right, guys, we are back. We're going to get into the charts. We're going to start with gold today, then we'll go to Bitcoin. But one thing I wanted to mention, guys, starting tomorrow, the game plan is going to be from Vegas. I'll be in Vegas tomorrow and Friday. The game plan, normal time, I'm just going to be doing it from my hotel room, believe it or not. So tune in from Vegas. I'll give you guys the lowdown on how things are going at the tables as well as in the whole city itself. Okay, right over here, take a look. We have our chart of gold. Now, gold yesterday closed fractionally below the channel. That's bearish. What follows up? A down day today. Where's our technical support? 2280. Boom, boom, boom. Exactly what the chart was telling us the probable move was. That is what is playing out. And again, folks, I love that. I love how almost every day I'm able to show you how the charts are playing out. Granted, every once in a while, per probabilities, as we know, it doesn't do what we think it's going to do. That's the nature of having a 70-80% success rate. 20 to 30% of the time, it doesn't do that. But either way, look at this great move down on gold today. We're trading at 2,300, and it is continuing to fall here. Your downside target is right here at 2,280. That's just a stopping point because we've already hit it twice. So again, my guess is maybe you get a small bounce, and then we start our next leg lower. This is where I'm going to start to really accumulate on a swing trade basis down here. Is it possible I miss it? Yeah, of course it is. But you know what? That's part of trading. It's part of investing is sometimes you miss a trade, but the discipline is what keeps you strong, finding your levels where you find yourself in the money more often than not. Speaking of which, this morning I already closed out an avalanche long in the crypto markets. We can take a quick look at that here. And if we flip over to that, you can see the levels right down here. I had so many levels in this lower range on Avalanche. We picked it up right here, and we're already out for about a 10% gain in about 2 days on Avalanche in smart money crypto. And that's what it's all about, folks. Again, I don't consider myself a hardcore bull on anything. I don't consider myself a hardcore bear on anything. It's what is the chart telling me at that time. And again, if the thesis is there, the thesis is there. It's just the nature of the beast. And so we get in, we get out. We also have other plays that are in the money on the long side, anticipating this bounce on Bitcoin. But ultimately, I still think Bitcoin, and we'll go to that Bitcoin chart next, is likely headed lower. And to be honest, Avalanche is probably headed lower too. It just gave us an opportunity to get in and get out. And that's the beauty of the way we trade here at Verified Investing is that, again, we're not falling in love with anything. There's no love here. It's just a matter of what's going to make me money, what are the technicals telling me, where do I enter, where do I exit, boom, boom, boom. That's it. All right, here's your Bitcoin chart. We know we held that. We got our bounce yesterday. Today, a small down day. Overall, I think you maybe have a little bit more upside, but then eventually another rollover to 57,000, 56.5. Then we'll see how that level of support handles it. Okay. Ultimately, if we get low enough, I'm going to be starting to inch into longs on Bitcoin. I do have my levels predetermined. If you're members of Smart Money Crypto, you know exactly what those levels are, where I'll start accumulating on the long side. But really right now, the thesis that I've had on being the only risk to Bitcoin was that the momentum in the stock market stalls out. And basically what that means is NVIDIA stalls out, right? I mean, it is the market at this point. And now we're starting to see NVIDIA stall out. And what's happened recently, Bitcoin started to come in. If NVIDIA corrects 20%, Bitcoin could go to 50,000. It really could. So just be aware of that. All right, a couple other charts here. Let's look at silver. Silver broke key support yesterday, this upsloping trend line. Here's your bigger channel. This is the more important one. I said it yesterday. I thought it was going to go down here. That's where I'm still looking, around the $28 level, right down in this range. That will be a level where I think about entering a long trade. Obviously, members of Smart Money Commodities will get those entry alerts as they come in. Oil today, fractionally positive, just a lot of chop here. It still hasn't hit my level, and maybe it won't. That's always a possibility. But as a disciplined investor, that's the level that I want to see before I really get all out bearish on gold, on oil. Again, is it possible? I mean, risk reward. I mean, how much upside? That much upside versus what I think is the downside. I mean, that's at minimum downside. I actually think it's going to $64 by late this year. But either way, you can see risk reward is definitely favoring the downside. But technically speaking, the charts for me, this is the alignment of multiple factors of resistance. If we hit that, then the odds probably are 80% of downside from that point of contention. Lastly, natural gas real quick here, guys. Nat gas continues to inch a little bit lower. It broke below this level, couldn't recapture it. I still think we're probably going down to this level here, and then we'll have to see if it holds in that range. Wow. All right, action-packed day in terms of analysis here, guys. So as always, it is a pleasure, such a pleasure to be with you guys and just hopefully you guys are gaining a lot of insights. Don't forget, share this stream. That's how you enter to win the token metrics and all the prizes on the wheel. Share it, then post as a comment where you shared it. And then also don't forget, you got to be a follower. You got to be a follower of YouTube, our YouTube or our Twitter. That's not just mine. Remember, mine is great. I love that you guys follow me on YouTube, but it's Verified Investing. This is a Verified Investing show. Make sure you're following Verified Investing on YouTube or on Twitter, or if you do both, you get bonus points from me. So thank you so much. All right, have a great day. Let me go get to the trading floor. I'll talk to you guys later.